Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me my friend and business partner, Chen Lin. Chen has been on the show a number of times in the past, of course, and he has a remarkable track record, and he has a very unique, very difficult style of investing. It's difficult for me to put my finger on it when people ask me, how is it that he's able to do so well? And I have a hard time coming up with it, and I think the reason is because Chen is Chen. There's nobody quite like him, and he has his own. He's just a very bright guy who works extremely hard and finds unique ways in the markets, inefficient markets, to make money. So that's the best way to describe Chen Lin for those of you who may not be familiar with him. But I'm really glad to have him again. Thanks for joining me, Chen.
Thank you, Jay.
Really good to have you with me again. Now, I know tomorrow you and your wife and two children are going to get on an airplane and fly on the other side of the world to Hong Kong to visit first your wife's family and then your family in mainland China. You are from Beijing, and your parents still live over there, and then I guess they spend the winter months down in Shenzhen. But what is your view? As you know, maybe you'll have a different view when you come back from China, but how are you viewing China now? I can tell you this, Chen, that the next guest that's coming on the show today, J. Michael Oliver, from a technical point of view, a couple of months ago, got pretty bullish on the Chinese equity markets, and he was about the only person that I knew that was starting to feel sort of bullish about China. But what are your thoughts about China and Chinese equities at this moment?
Oh yeah, that was a great call on the Chinese equity. China. I became bearish on China since last year. I remember about early last year, almost 2 years ago. I was shorting Australian dollar, shorting copper, shorting oil, the other thing. Last year, I even gave a famous quote unquote prediction that oil will go to 47. That was last summer, and nobody believed that. But anyway, I see China continue slowing down. It's very hard for the government to maintain the 7%, and I think they probably should set their goal to a 3 to 4%, which is more realistic. 7% require massive QE, massive Chinese way of QE, money printing. And pushing, and that's just too much. China economy already second largest in the world, and the rule of economy is that you just cannot keep going at this speed. So it's better to the always economic cycle. China has been boom for like 30 years, and it's time to take a breather. But on the other hand, your friend actually made a great call on Chinese equity. Because China cut interest rate, that's lead to the equity market boom. I have a lot of people asking, how do we invest in Chinese equities? I know you cannot. It's a domestic equity. It really has for the for people who live in China. You can trade that. For outside China, for the other share, H share, whatever, there's no use. It's different, very different.
Yeah, for sure it is. Although I know there's an ETF that I follow that has done quite well with Chinese equities, FXI as a symbol. But I know that you have never really been keen on investing in Chinese equities. Your focus is mostly, it's other places, but primarily North America, I suppose, and not just resource markets, which is, of course, when you and I first met, you were primarily into the gold markets at that time, into oil and other natural resources, but you've really picked up on a lot of different areas, biotech. I think one of the things that makes you so unique is that you're not focused in one sector for sure, but you're looking for different ways to make money in different kinds of in different industries at different times. For example, you've done very well with ethanol this year. You've done extremely well at times with oil. You've done very well with bio stocks. You've done very well. I can remember you made a lot of money one time after the financial crisis when you got into Farmer Mac. Another one was paper stocks. When you got into paper pulp stocks, you did very well with that. Seeing ahead of time before the big guys could see it, you were out there and picked up on some of those themes very early. So, how you do it, if people ask me, how does Chen do it? I don't know. How do you do it, Chen? How do you approach investing?
Thank you, Jay. I mean, I'm just looking from outside in. I'm not expert in biotech, right? So, but I can look at the company, look at the balance sheet, look at the potential, and then evaluate myself. You think for gold, for oil, for days, I know a little bit more, but still, I'm more a long-term shareholder, and also trying to look for the idea that the mainstream that should miss. Right. Mm-hmm. So, you mentioned paper pulp. Yeah, that was a classic example because it was Chile earthquake. At that time, people on the CNBC were talking about, copper will get hit. But actually, if you know that Chile is a very long country, right? I mean, the copper is north, and this is more in the central. So actually, it's a paper pulp industry got devastated. Right, so the paper pulp happened to their factory like to be on the ocean, so easier to ship out. And then the tsunami came, was devastated, actually created a huge shortage for paper pulp. And I was able to take advantage of that. Right, so I remember I came out with my recommendation on my newsletter like 1 week before Goldman gave the recommendation. Right?
Yes, I recall. Very congratulations on that. And
that's a few years back. But that I like to look at all the different opportunities. I mean, I like look at a lot of different sectors as well together at the same time. Because like gold market was terrible in the past 3 years, right? I mean, if you just focus on, I mean, I know you are, but I respect that. But for me, is if I put there, I just look at it 3 years. Even no matter how hard I work, there's very little use because all the equity is coming in. Yeah, I'm looking at all the different sectors, and I pick the sector I think has most potential, and then I put more effort on that, and I try to pick the best stock, right? I mean, also in the sector like gold, I really like gold, but 3 years ago I saw gold mining company, they couldn't deliver their promise, their costs are rising very fast. So I told my subscriber, I'm done, I'm underweighting gold, like underweighting gold miner. Remember, I was like back 2012, there's people asking, how did you do so well? The gold market got coming down so hard. I said, well, I was underweighting gold miner, right? I was underweighting for the past 3 years.
Yeah.
So, but it started to change. I started to see the light, started coming from the horizon. And, I'm getting a little bit, starting cautiously, as you said, cautiously excited about gold mining again, but I'm still very cautious. So in general, that's my take, right? I mean, I was bearish on oil. I was since last year, so I was able to watch the oil price. I say, wow, this September, when oil was still 100, I thought, well, there's a great danger in energy stock. So I told my subscriber on September 5th, right, oil still was 100. I told them to sell energy stock, to get out. But, it's like, look back 3 months. If you didn't, 4 months, if you didn't sell early September, you'll be getting killed because most of energy stock down 80%, right? 80-something, 90%. I mean, in the past 3-4 months. So that's the thing, because you look at the big picture, you understand the industry, and allow me to, to see the moment to, for example, underweighting gold miners 3 years ago, and get out of energy stock, 3 or 4 months ago.
What is your, I guess your point is well taken in being cautious about gold, because we're looking at, day to day. For example, today it was up sharply in Asia and Europe, and then it got hit really hard as London closed and New York started operating. And the volatility has been pretty extreme in gold the last few trading sessions. Do you see that continuing, Chen?
Yeah, it's very wild. The key is tomorrow, right? Today is Tuesday. Tomorrow we'll have a Fed announcement, and there's I saw a lot of research. The shorts are really, waiting for this day. They are betting on the Fed will announce, they will no longer have keep interest rate low for extended period of time, right? They will remove that clause. So the shorts are waiting for that clause, and then they want to give the gold bulls a final punch, right? You can see today, right now it's below 1,200 again. It was just up and down, up and down. It's fighting. Yesterday I was writing my newsletter, I just saw the future start to drop. You can see the inverse of the future, which means the short attack. Because short, in general, they don't want to short the front month, very close to front month, because they can get squeezed, right? You short 2 months future.
Right.
When futures, people call you gold, you don't have gold.
Yeah, they might be asked to deliver the gold and they can't do it, so they go out the longer term. Yeah.
Exactly. You can see that from future market, that they tend to short a couple months ahead, so at least they can pretend they have the gold to deliver. I mean, at least they don't need to worry about that.
Right.
See, that just came yesterday. Oh my.
Yeah, and then what you see is the short-term contracts get taken off and get canceled out before a delivery date.
Right, the short term. So that's where the inverse gold leads, right? We saw that. I mean, just the market's in chaos, okay, right now. And I think the bears trying to push very, very hard tomorrow when the Fed announcement come out. Unfortunately, I will be leaving tomorrow night, so I won't see too much fireworks on Thursday. I'll be on the plane.
Well, you probably can keep track of things on the plane. I suppose there's a way, Chen.
If I want, but it's, I don't know. The airline I have flight, I'm not sure has Cathay. I don't think I have. They have a wireless internet. But anyway, I probably just want to rest.
Yeah, that might be good. You've had a very successful year. Well, Chen, we just have a couple of minutes here yet, but let me ask you though. You did well with ethanol last year. How does ethanol look to you now?
Oh, I'm cautious. Okay, I'm very cautious about ethanol right now. I was trying to see if I can get back in, but right now I only have a small position. I'm looking because I'm trying to see the supply demand. Tomorrow going to have another EPA data. I'm trying to see the data come out. How much gasoline increase in gasoline supply coming out first, okay? And how much storage. These are very, very careful, very, very important numbers. I want to see if there's any shortage. I see one potential is increased gasoline demand will increase the ethanol demand to mix 10% by law mixing gasoline. So we may not be able to do that. But however, there are also we also have a large export market. So it's a little bit complicated situation. I want to make sure I'm on the right side before putting more chips because the market is so tough these days.
You had you're quite cautious on gold, and I suspect silver as well. Though I think you're very bullish on the platinum group metals, aren't you? And Stillwater was one of your picks, I think, last year that did fairly well.
I did better on the future in the platinum futures.
The futures markets, okay.
Yeah, that did great because Stillwater also did well, but that in future, with some leverage. I mean, South African strike that's really the great opportunity. Especially before South Africa strike, our friend Dennis Gutman was on CNBC say sell. Actually, we went down a lot, so I was able to buy at a very, very low price at $700. Went all the way to $900. Think about the gold went up $400.
Well, you should send Dennis Gartman a Christmas present for that.
Well, I would have already, but I really appreciate. He was right in some cases, but that was a questionable call. But anyway, I like that because pollution in China is very, very severe, and we were in China like a year and a half ago. It's very hard. You have to check the pollution index to decide whether you go out to the park or go to indoor. Seriously, it's the impact that's. I think that China will tighten up the pollution standard, the car emission standard. That will need a lot of palladium and platinum, mostly palladium, and also most of palladium is from Russia. Right, with all these sanctions against Russia, what if Putin, there's something, they always a risk, right? But
sure.
Back to the corner. I mean, right now.
Well, Chen, we just have another minute left. Can you tell us, give our listeners the names of a couple of your favorite? You have two very low-cost silver stocks that you like a lot, and there are a couple of gold stocks. Could you just give the names of those stocks, perhaps, to our listeners, so they can maybe follow up and research them?
I like a silver stock like a producer, that company has good balance sheet that don't need to dilute. Silver Standard, quarterly on First Majestic, they are silver stock. I like gold stock. Of course, my favorite is Oceana, Ovana,
and Orvana, okay.
Ovana just announced they have the in cash now. They pay off all their debt. So,
that's good.
Those are stocks that company can really take advantage. With oil coming down, the mining cost, that's the key I like, is the cost of mining
absolutely.
Can go down at least $100 next year.
Absolutely. That can really reduce the cost, the operating cost, no doubt about it. I think Orvana actually reported an accounting loss, though, didn't they, Chen, last year?
Yeah, they have accounting. They have all these write-down, but, they close down a lower, or they close down one mine that's a lower grade, but they focus on higher grade. I mean, and then they pay down all their debt, right? You look at it, the latest, they have 16 million cash and I think 6 million in debt or something. They are a very clean balance sheet and should have a very bright future. I mean, going forward. Same as Oceana, they have generating a lot of cash flow at this current gold price.
Okay, Chen. Well, we're out of time, unfortunately, but thank you very much for joining us again today, and have a safe and happy, fun time with your families. You're heading off to Hong Kong tomorrow evening, and I look forward to talking to you when you get back.
Thank you, Jay.